We're going to analyze Walmart as an investment, and we're going to do it all in 90 seconds. You want to keep up with stocks, but you don't have the time to read a lengthy report on every company that interests you. You're busy. I get it. I respect that. So I took the most important considerations from my research and packed it into 90 seconds. Use this to decide if it's worth your time to research further, to keep up with stocks you already own, or to just check in on some of the largest companies in the world. Fair warning, I'm obviously going to go fast. Let's pull up a clock and let's do this. Walmart is the largest brick and mortar retailer in the world. As of this taping, they have a market capitalization of around $250 billion with a share price around $80. It operates 11,700 stores and various e-commerce websites under 65 different banners in 28 different countries, and is the largest private employer in the world with around 2.3 million employees. To own or not to own? That is the question. Here are a couple reasons you might want to consider owning Walmart. Probably the biggest reason is for its stable and regularly increasing dividend, which has averaged since 2009 around 2.5%. But keep in mind that also happens to be the average for the consumer retail industry. Walmart is relatively healthy with a net worth around $80 billion and a gradually diminishing debt level. In fact, its cash and short-term assets are enough to cover all of its long-term liabilities. They seem to be making progress in their e-commerce efforts, reporting 33% growth this most recent quarter compared to less than 25% in the previous quarter. But here are a few reasons to not own Walmart. With their substantial e-commerce reinvestment, the company's margins keep shrinking. Walmart's PE and PB ratios are higher than the average for the consumer retail industry, which is somewhat surprising for such a mature company. At the same time, its expected annual growth in earnings and revenue are less than the industry. Its earnings decreased by 34% over this last year compared to the industry's increase of almost 17%. And finally, over the recent past, Walmart's insiders have been net sellers, which could mean a number of things that have nothing to do with the company's valuation, but it's something I like to keep an eye on. Walmart is a mature, well-established company, especially in the United States. Their greatest opportunities for future growth lie in e-commerce and further international expansion. If Walmart can effectively secure e-commerce market share, their future could be much more promising. But that's easier said than done when you consider their much nimbler competition in that space, Amazon. So what do you say? Buy or no? Do you think their reinvestments into e-commerce will pay off? Or are they just hurting their bottom line, your bottom line as a shareholder? I look forward to continuing this discussion in the comments. And if you found this helpful, don't forget to like and subscribe and click that bell so that you can keep up with all the companies that we cover as we continue to help you build your rapidly growing, highly diversified net worth. I'll see you in the next one. Take care.